Develle Morrison joins us now for our weekly real estate check-in. She's a broker with Bosley Real Estate Limited. Hey, Develle.
Hey, how are you?
Good. How are you?
Good.
How are your allergies this morning?
Well, I haven't left the house.
Oh, you haven't? Okay. I have been, I was thinking about you this morning because I was just sneezing all the way here. And I wanted to check in with you because they've been pretty bad this morning. All right, let's get to some of the headlines. Today, let's start off with what everyone has been talking about this week. The Bank of Canada increased the interest rate by 25 basis points to 4.75%. I spoke to someone this week that has a variable rate and their mortgage for a really tiny townhouse is now $4,000. It is incredible. I just feel like this is going to further squeeze out mortgage holders. What are your thoughts?
Yeah, no, absolutely. Like it's definitely people were having a tough time before. And I think that's why people were really just kind of hoping that the Bank of Canada would pause rates.
Yeah.
But I think with the recent inflation numbers, because inflation did go up, hence the Bank of Canada increased the rate by 0.25 percentage point. And I think that the scary part is that when they do another rate announcement in July, it looks like there will also be another rate increase.
Yeah.
So, for those mortgage holders, it's sort of that how much longer can they hold on, right?
Yeah. And then we see the employment numbers, right? 17,000 less jobs in May. And so you just wonder this game of numbers that the Bank of Canada continues to play. It's the long-term effects of this. What do you think that looks like for housing sales? Do you think we're going to see sales of homes cool off a bit?
No. I think that ultimately the rate that it's at right now, the 4.75, is historically not that high. So, I think back to, my mom and other people who paid double-digit interest rates back in the 80s and the 90s. And so it's high to us because in the last 3 years, our memory is very short. But historically speaking, the rate isn't that high. So I don't think this will affect housing prices. I think housing prices will continue to go up simply because we still have a huge supply issue. And I would say that this increase in interest rates actually exacerbates that supply issue because now you've got people who go, you know what, I don't want to move because I don't want to break my mortgage and pay the mortgage penalty and have to pay rates at this much higher rate. So I think that that's the challenge. But in terms of, it seems like everyone's trying to throw water on the Canadian real estate market, and it's just not possible.
I do struggle with that, with your point there, though, because, I can understand, back 20, 30 years ago when interest rates were really high. But I mean, you're talking about people who have never experienced that or lived through, 11 percentage points or whatever that was back then. So, when you're coming off of a year where where the interest rate was so low that people were buying left, right, and center, and there were bidding wars up the wazoo, I just wonder if this is that new normal, right? Like, I get your point that for some people, it will take a lot more for them to really get scared and to maybe back off the housing market. But I don't know. For me, I mean, we've been looking at moving to Toronto and we've been scared off and we're going to continue to stay outside of the city because it just costs so much.
Yeah, no, fair enough. But, the shocking thing is how much money exists out there. So, yesterday I was out showing houses to a client and we were looking at houses in the $2 million range.
Yeah.
And when I look at the number of business cards that are down at this particular house, it was a house in Riverdale, it's $2.4 million with an offer date. And I look at all the agents' business cards and they're agents that I know. So I know that they're working agents. I know they have valid clients, and that's a $2.4 million house with an offer date that is still going to get offers on offer night. So I do think that, yes, you're right. There are some people struggling. And case in point, there's that article from Equifax where they're talking about the fact that people aren't missing their mortgage payments. They're missing their credit card payments instead. So it's almost like you've got this tale of two markets, because you've got people who are like, I can't pay my credit card bills. They're not getting their nails done. They're not getting their hair done. The only thing they're doing is paying for their mortgage first. But some of those people at some point will hit a breaking point and will need to sell. And we still haven't even talked about the whole landlord-tenant equation yet.
Yeah.
Last week, I think it was last week, we chatted about how there are investors who are losing money every month on their investment condos.
Yep.
So you've got someone like that who's now renting. It's not their principal residence. So they're not as tied to keeping it. And so now interest rates have gone up. They're going up again in the next month. I think you're going to see those people go, you know what? Maybe I'm going to sell. Now you've got a tenant that's actually going to be out that has to look for a place to live in this market. Yeah, this is not a nice market for tenants to be looking for a place to live.
I have 2 minutes left before we take our break, but let's talk a little bit about that credit card story. So, a report by Equifax says that Canadians are using their credit cards a lot more. 175,000 more consumers missed payments on at least one non-mortgage product, such as a credit card or a vehicle loan. I will go on the record to say I pay my mortgage and I get my nails done, just for the record. It's a little me time. I need a little me time. But it also does go hand in hand with the report that we heard just a few weeks ago that said that Canadians had the largest household debt compared to other G7 countries. So
yes.
Is this country just getting too costly to live in? I mean, it just boggles my mind when you see people using their credit card to buy basic groceries, and again, then missing those credit card payments. We're in a serious problem in this country.
Absolutely. I mean, but maybe we're also just drunk on credit card debt too, right? So paying for groceries is one thing, but maybe we're paying for a lot of other things that we don't actually need.
Yeah.
Right? Like we need to learn budgeting, something they don't teach us in school, which they should. Right? So maybe we could all use a budgeting 101 course. Yeah. I mean, I think that's probably a better solution to all of this, right?
I've always had in my mind that groceries is such a necessity that you pay cash with it. I don't know. That's always been something that that's my budgeting thing that I do. And all the extra frills, you could put on a credit card. But I've always just thought, okay, you always have to budget out your grocery money because it's like you have to survive. You have to eat. And you're right. I don't think we do learn enough about budgeting, and it wasn't taught in schools. And I remember my first credit card was in university, my first few days in university. I was like barely 18 or 19 years old. And there was a credit card company there. I was signing you up. And of course, you're going to say yes. And it's just right there for the picking. Okay, we're going to take a quick break and return with DeVell Morrison. We'll be right back. We're back with DeVell Morrison, broker with Bosley Real Estate Limited and regular contributor here on Toronto This Weekend. 200 residents who live in a high-rise in the West End of Toronto have decided to stop paying rent to protest the rent increases in the building. One resident says her rent can increase by 40%. The landlord has applied for 6 above-guideline rent increases in the last 10 years. Let's hear a clip of one of the representatives from the tenant union who spoke on the John Oakley show earlier this week.
So the situation in 33 King Street has a long history of something called above guideline rent increases. They're commonly known as AGIs. This building, 33 King Street, actually has the highest number of above guideline rent increases in the whole city. The position of the York Southwestern Tenant Union and that building's tenant association is that these are excessive, and that it's the landlord that is using them to avoid following rent control, avoid actually following rent control guidelines and keeping rent increases reasonable. And over the last 5 years, rents have gone up in that building a total of 22%, whereas if rent control was followed, that increase would have been no more than 7%.
So, DeVell, my question is, why isn't rent control being followed? I mean, we've talked about this before, and remind me if I'm wrong here, that buildings built after 2018, is that correct? Are not under rent control. This is an older building, so I don't understand how this is happening.
So essentially what happens is that If a landlord does significant renovations, they can apply to the landlord-tenant board for an above-the-guideline increase. So maybe they've fixed balconies, they've done whatever it is, fixed an elevator shaft, all those kinds of things, because normally they can only increase rent once a year by the rate of inflation, 2%, 2.5%, 1.5%, etc. But in order to get an above-the-guideline increase, they have to apply, show their books, essentially, show how much they've spent, show what they've done, and they have to wait to get approval that they are actually allowed to increase rent by the above-the-guideline number,
right?
To show it. Now, it's interesting in that clip, she's saying that this happened a lot with this particular building, so that's a little shady, but I would say that in general, when people are applying for these guidelines, it's not necessarily always shady. Sometimes buildings need work. I mean, think about Miami, the Surfside condo building. And that's a condo building, not necessarily with renters. That's a condo building where everyone said, you know what, we don't want our maintenance fees to increase. We just want to, we don't want to fix anything else, right? So if you don't fix structural or other major issues for a long time, it can become a bigger problem.
Yeah.
And we know from, the TCHC buildings, so the Toronto Community Housing Corporation buildings, some of those in Parkdale, that those buildings are in such disrepair, the tenants can't even live in them anymore. So it's about achieving this balance. You need to make a place livable. You've got to make sure that the building is going to be, structurally sound over the next few years, but you also don't want to gouge people at the same time.
Dream Development, who owns this property, has noted in a statement that they are working with tenants to develop individual payment plans to help alleviate financial pressures. We've talked about this issue a number of times in this segment, or on the segment Devel. Everyone is feeling the pinch. But if you have people who are renting right now, and this is the case with this story, who have to choose rent over food, I mean, that is also quite disturbing. It
is, definitely, for sure. And I mean, it sounds like this building is probably fairly inexpensive by Toronto standards.
Yeah.
It's not a downtown building, so the rents are probably cheap, but that's probably why the people like it and they want to stay there. But yeah, I think it's a bit of a challenge. I mean, it's not just happening here. I read last week there was another building in Thorncliffe where a similar situation where they also have a rent strike for the same reason because their landlord is also doing above the guideline increases.
And I think we might see more of that, especially, as we've pointed out, as just the cost of living, the cost of maintaining things go up. I think we're going to see a lot more landlords saying we're going to have to hike up the rental costs, and that's going to make a lot of people upset. Okay, we've all been breathing in the smoke from the wildfires in the region, and it's come to light that the Ontario government had cut the Ontario Emergency Forest Fighting budget by 67%. The ministry has said that they will spend as much as they need to spend to fight these forest fires. We should keep in mind that forest fire season happens every year, April 1st. I think it's making a lot of news because we are experiencing it here in the GTA, in the Toronto area. I was talking to somebody who lives in BC, and they're like, "Yeah, this is a normal thing for us. We're always breathing in smoke from the fires that are up north." But when we hear though that something like, the forest fighting budget has been cut by 67%, that, there are less firefighters up there year round, clearing brush, making sure to maintain the area as well so that this doesn't happen, so that we don't have an increase in fires. It makes me think we are not, this is an insurance policy, essentially, Devel, right? We need to continue to pay into our insurance to protect surrounding areas, including New York. I mean, we all saw the pictures.
Yeah, exactly. Oh my God, that was astounding this weekend. I mean, we were talking about allergies on the way in. I mean, I was coughing this week because of that smoke, and you've got kids whose school recess is canceled simply because of the smoke. But it's unbelievable that the government literally underfunded, the emergency forest fighting by such a huge percentage. And then, they obviously don't think that this is important. But we are seeing forest fires increase year after year after year. So clearly something's got to happen. But unfortunately, we are dealing with a government that they don't want to think long term, right? We were just talking about before how these condo buildings are trying to think long term and protect their building. But we have a government that's not thinking long term on forest fighting, but also isn't thinking long term about healthcare either.
Yeah. Oh, let's not get started on healthcare. We'll go way over our time allotted there, Deval.
Right.
What I find fascinating too is the province's response has been that, we can call Mexico or Australia or New Zealand if we need help with fighting these fires. And again, we have seen so many cuts that we shouldn't have to be at that point where we're calling in people in this province from other countries when when we're seeing, a shortage of 50 firefighters up north maintaining surrounding areas so that this doesn't happen. My concern also, Deval, and I brought this up this week on Alex Pearson's show when I was on with her, is are the communities in the area as well, right? Like we're feeling it. Can you imagine?
I know.
What they have been going through. And again, this is a yearly thing. This happens all the time. But if it was at this extent where we saw New York, basically the height of daytime, it looked like, the apocalypse, you could only imagine the houses closer to the fire.
Absolutely. And I mean, sure, these forest fires happen on a regular basis, but I feel like not to this extent.
Right. Yeah.
Nova Scotia, Quebec, Ontario, Alberta. I mean, this is affecting across the country. So if you underfund, Ontario, it's not like we can even call on the other provinces to help us. To your point, we have to go outside of the country simply because every other province is struggling with it. And the other thing is that some of these forest fires are man-made.
Yep.
Like, it's not like they're all climate change related.
Yep.
Some of them are man-made. People, whether it's they threw out a cigarette butt or they didn't, squelch their campfire properly. So I think that's the scary thing.
Yeah, absolutely. This is an interesting story that you sent my way. Everyone, I guess, is feeling the pinch. Even hoteliers. Hilton, San Francisco Union Square, which is a hotel in San Francisco, and Park 55, which is also owned by Hilton. They're both Hilton properties, have essentially abandoned their properties. The company has said that they will stop paying mortgage payments and give up the properties. I've never heard of this. And essentially they're saying the downtown core is basically a ghost town. They cannot get people in. Conferences are down. There's low office vacancy. They're looking at 30% less of office vacancy. Conventions are down by 40%. I can see this happening if we are not careful in Toronto as well.
Exactly. And that's exactly why I sent you the article, because to me, it's a cautionary tale of what could happen to Toronto if, we don't have the right leaders in place.
Yeah.
And so when I look at the mayoral race right now, I'm like, this is scary, because I see this San Francisco article about the crime downtown, Whole Foods, Nordstrom, they're all closing down. And I just think, if we don't fix our housing crisis soon, we could also end up just like San Francisco. We know we're similar. San Francisco housing prices are higher than what they are in Toronto. But, if we don't put in the right mayoral candidate, then, we could also go down this same scary path too. So I think this is a cautionary tale, but it's also very scary to see what can possibly happen.
Absolutely. We're going to have to leave it there. Thanks so much, Deval.
No problem. Thanks for having me.
That was Deval Morrison, broker with Bosley Real Estate Limited and regular contributor here on Toronto This Weekend. When we get back, you've heard about the doctor shortage. I'm going to tell you about one story of a Canadian doctor that would have liked to have come back to this country, but Canada has said, nope, our doors are closed. That's after the news. You're listening to Toronto This Weekend on 640 Toronto.